Hey, what's up everyone? Bill Lethman here for Money Evolution. And in today's video, I'm going to be talking about when to start collecting Social Security benefits. So chances are, if you've been planning for your retirement, then you probably already have a pretty good idea as to just how important your Social Security benefits are to your overall retirement planning strategy. In fact, it's actually one of what I call the 7 core elements of retirement planning. So I'm filming this video here today. It's March of 2019, and I think it's important to mention that because although there's a lot of good information out here on the internet, on YouTube about Social Security, I think it's very important that you have the most up-to-date, most current information because there have been many changes to Social Security, especially over the last couple of years. So this video is going to be part of a new playlist that we're going to have on our YouTube channel. In fact, we'll put some links right below today's video where you can access not only the entire playlist, but the other individual videos that are out there. And remember, if you like what we're doing here, make sure you hit that like button, make sure you hit subscribe so you can get access to all of our newest information. So here's what I'm going to talk about in today's video. First, I'm going to talk about some basic terms and definitions that you need to understand before you make your decision as to when to collect your benefits. I'm going to talk about how when you collect affects your benefits and how much you actually are going to get. And then I'm going to talk about the 5 factors that you need to consider before deciding when to collect your Social Security benefits. Okay, so real quick before I get into the terms and definitions, one thing that you might want to do is have a copy of your Social Security statement handy. So that way, as we're talking about some of these terms and definitions and some of the numbers that we're going to get into, you'll have your statement there for easy reference. So you can grab that statement pretty easily, go to ssa.gov. If you've already created a username and profile, you should be able to just log right in. They do have a 2-factor authentication, so usually they'll text you a number that you'll have to put in as well. And if you haven't set up a profile on Social Security, that's pretty easy to do as well. So just follow the steps. Should be pretty straightforward to go ahead and do that. Okay, so now let's talk about a couple of terms and definitions that you need to understand before you decide when to start collecting your Social Security benefits. So the first one is what's known as your full retirement age, or sometimes we abbreviate it as FRA. And your full retirement age is going to be the age that you need to reach before you're entitled to unreduced Social Security benefits. And depending on what year you were born, your full retirement age can vary anywhere from age 65 if you were born before 1937 to as late as age 67 if you were born after 1960. And then depending on if you were somewhere in the middle of that, it could be age 66, it could be 65 in some months, it could be 66 in some months. So it gets a little confusing there, but if you just look at this chart here, you should be able to pick up pretty quickly as to when that Social Security full retirement age would be. Then of course you could always look at your Social Security statement as well, and that will tell you what your full retirement age is there. Now we're going to get into some detail here shortly as to when you start collecting based on that full retirement age and how that affects the amount that you're actually going to get. Now the second term that you need to understand is what's called your primary insurance amount, or sometimes we abbreviate that PIA. Now your primary insurance amount is the amount of your Social Security benefit that you're entitled to at your full retirement age. And that's going to be a very important thing to know as well because that's going to be tied to other benefits such as a survivor benefit, and it's going to be that PIA that's going to be either discounted down if you decide to collect it before your full retirement age, or it's going to be grown or increased if you decide to delay taking your Social Security benefit beyond your full retirement age. So primary insurance amount, PIA, and your full retirement age, those are probably the 2 most important things that you need to understand when it comes to your Social Security benefits. Okay, so now let's talk about how your Social Security benefit is going to be impacted by when you decide to start collecting. So number 1 is your Social Security benefit is going to be calculated based off of your 35 best years of work history. In fact, actually, if you read on your Social Security statement, it probably says something similar to this. You've earned enough credits to qualify for benefits at your current earnings rate. If you continue working until full retirement age 67 in this case, your payment would be about X number of dollars per month. At age 70, your payment would be about this much, and at age 62, your payment would be about this much. So what that's assuming is it's assuming based on what you earned last year, or the last year that Social Security recorded this, that you're going to continue to earn that exact same amount going forward every year until those milestones that they've calculated there. Your full retirement age 62, which is the earliest that you're eligible to start collecting, and age 70, which is the longest you can delay and still have an increase in those benefits there. So if you cut that short, if you start taking your Social Security benefits early, it might mean that there's going to be a recalculation of those 35 best years. So one thing that you can do is pull out that Social Security statement, look at your earnings history, and see, do you have, in fact, 35 strong years of work history? In fact, actually, I just recorded a video a couple weeks ago about this. It was entitled, What Happens to My Social Security Benefits If I Retire Early? And I got into a little bit more detail on some of those calculations. I'm also planning to do another video here. Once that's recorded, we'll put a link below today as well. But that's going to be how your Social Security benefits are calculated. So it's important to understand that, understand whether or not you do, in fact, have those 35 best working years. The second way that your Social Security benefits will be impacted by when you decide to start collecting has to do with when you turn those Social Security benefits on relative to your full retirement age. So again, your full retirement age is going to be the age that you need to reach before you're entitled to your full unreduced Social Security benefits, but you do have the option to turn your benefits on early. In fact, you can turn them on as early as age 62, but at a reduced amount. You can also delay your Social Security benefits beyond your full retirement age all the way to as late as age 70, and every year that you delay, you're going to have your Social Security benefits increase by about 8% every year that you wait, again, to age 70. So here, looking at this quick example here in this chart, if your full retirement age was age 66, that's again the age that you're entitled to 100% of your benefit. But if you decided to turn your benefits on early at age 62, they would be reduced by about 25%. You'd be entitled to about 75% of that full retirement age amount. And then you can see some of the years in between there as well. And again, every year that you're going to wait beyond your full retirement age, you're going to see an increase of 8%, all the way up to age 70, in this case at 132%. That's again, if your full retirement age is age 66. Your full retirement age might be a little bit different than that. If it was age 67, like those of you that were born after 1960, you can see what that looks like. Probably the most notable thing on here is that you don't get 4 full years of increases beyond your full retirement age. So it tops out at 124% as opposed to 132% for those of you that have a full retirement age at age 66. And again, if you take your full retirement benefits early at age 62, your benefit's going to only be 70% of your full retirement age amount instead of the 75% that you'd be entitled to under the age 66 full retirement age. So I hope that makes sense there a little bit, understanding what that impact is of collecting early relative to your full retirement age. So now let's talk about the 5 factors that you need to consider when deciding when to start collecting your Social Security benefits. So number 1 on this list has to be longevity. I don't think that any discussion about when to start collecting Social Security would be complete without first having a discussion as to how long am I likely going to be collecting on these benefits. And that's going to be a huge determining factor. So the first thing we want to look at is, well, what is the likelihood or what does the longevity look like? Well, I went to the Social Security website and they had some actually pretty good statistics on this. So they said that a man that's age 65 years old today can expect to live on average to about 84.3 years old. And a woman age 65 today can expect to live to be about 86.7 years old. Now, one thing to keep in mind is that those are just averages, and a lot of people are actually going to live longer than that. Hopefully, you're going to live longer than that. So to give you an idea, about 1 out of every 4 people, about 25% of individuals will actually live to be older than age 90, and about 1 out of every 10, about 10% of individuals will live to be past age 95. So those are some great odds that you're likely or hopefully going to be collecting those Social Security benefits for a very long time. In fact, actually, when you look at married couples, this is very important to consider. We're going to talk about this a little bit later, but when we start thinking about survivor benefits as an example, and especially if you're the higher earner there where you've got the higher Social Security benefit, your spouse will likely be collecting off of your work history. And a typical couple age 65 years old has about a 50-50 chance that at least one of them is going to live to be older than age 90. So again, you want to think about the longevity there. So on the subject of longevity, I created this table here, which is hopefully going to give you a pretty good idea as to what your lifetime benefits might be for different filing strategies. So this assumes an age 67 full retirement age, and we also assume that they're entitled to the maximum Social Security benefit. So for 2019, the maximum primary insurance amount, there's that term, PIA, was $2,861 per month. And if you took your benefit at your full retirement age, you would get $34,332 per year. Now, this doesn't have any inflation factors in here. This is just basically taking the raw numbers because we don't know what the inflation is going to be. But then we look at the total lifetime benefits. If we made it to age 80, $480,000. If we made it to age 90, $823,000. And if we made it to age 95, just short of $1 million at $995,628. Then we can see very quickly or very easily here, what is the impact, for example, if we took those benefits at age 62. So again, that benefit would drop by, in this case, about 30% to down to $2,002 per month. And those total lifetime benefits to age 90 would be only $672,896 compared to $823,000. So we can start to get some pretty good comparisons there. Of course, nobody knows how long we're all going to live, but this should give you a pretty good idea of that. And then again, looking if we delayed those benefits to age 70. So in looking at this, if you're going to live longer, it certainly makes sense to at least consider delaying those benefits because your total lifetime benefits would be higher if you lived longer, or if you have a spouse that gets a survivor benefit if you were to pass away early. It's very important to think about that and what that filing strategy does to those lifetime earnings benefits. So the last thing that I want to talk about here as it pertains to longevity is on the subject of the break-even. And I know this is something that a lot of you will be very interested to know how this is calculated here. But what we're essentially talking about is that break-even point between, taking that higher amount, waiting until, let's say, full retirement age, or even waiting to as late as age 70, taking that higher amount, how many months or how many years do I have to live and collect that higher amount to make it more worthwhile to have delayed my Social Security benefits versus collecting them as early as I could, let's say at age 62. So let's use that same example that we've been looking at here. And so we know that if you took your Social Security benefits as early as you can at age 62, you would get $2,002 per month. If you waited, let's say, until your full retirement age, you would get $2,861 a month. So that's a difference of about $859. So here's how we calculate this. So first thing we want to do is we're going to collect that $2,002, let's say, every month for about 5 years, from age 62 until age 67, your full retirement age. So over that 5-year period, you would have collected $120,120 in total Social Security benefits. So now you're age 67. Now we're going to compare that to the delayed individual, the person who waited to take their benefits. So what we do there is we know that they're going to get $859 more per month, and we just simply divide $120,120 by 859, and that tells us that we have a break even of about 139 months, or about 11.65 years to be exact. And so that tells us when we say, well, how long do we have to live to make that more beneficial? Just from a pure number standpoint, we would have to live to be at least age 78.65. So beyond that, you would now be collecting more money from Social Security having waited until your full retirement age versus collecting that money early. So we can do that calculation with anything you want. You could do it on age 67 versus age 64. You could do it at age 70 versus your full retirement age. And all we want to do is we want to find the difference in that monthly payment, and then we want to divide that into the total amount we would have collected over that period of time that we're getting Social Security benefits early. So I hope that makes sense, and that's the last thing I want to talk about on longevity. Then we're going to start getting into the other factors here. The second factor that you need to consider when deciding when to start collecting your Social Security benefits has to do with the impact of your decision as to when to file, what impact that has on your spouse for either their spousal benefits or for survivor benefits down the road. So a couple things to note here. So your spouse is entitled to a benefit that's worth at least half of your primary insurance amount. So if your primary insurance amount was $2,000, your spouse is entitled to half of that, or a $1,000 benefit. So a couple things to note here. So your spouse's spousal benefit is not dependent on when you start collecting. So whether you collected early or you delayed, past your full retirement age has no impact on what your spouse actually gets. It's only going to be based off of that primary insurance amount. However, you do have to file for your benefits in order for your spouse to be able to collect a spousal benefit. So that's very important there on how your decision maybe impacts your spouse. Now, one important thing here, there was some changes back in 2015 from the 2015 Bipartisan Budget Act that eliminated a couple of fairly popular Social Security filing strategies. So one of those was what's called the file and suspend strategy. And what that did was it allowed for one spouse, usually the higher wage earner, filed for their Social Security benefits, but then immediately suspended them. And what that did was that allowed for that spouse, maybe the lower earning spouse, to go in and collect a spousal benefit off of that higher wage earner's work history. So again, that was closed. So if you had that available to you, you needed to file and suspend before April 30th of 2016. If you didn't do it by then, that loophole is permanently shut as of right now. Another thing that they closed in that Bipartisan Budget Act was what's called the restricted application. And so this is something that isn't completely closed yet, but it is only available to certain individuals. I'll get to that in a second here. But what a restricted application did was it allowed for one spouse to go in and collect spousal benefits early, and then it allowed them to continue to grow their own earnings or own Social Security benefit off of their work history going forward. So that is something that you had to have turned age 62 before December 31st of 2015. If you didn't qualify for that, if you didn't turn 62 before that deadline, then you can't do the restricted application. But that is still available to some of you possibly watching this video. So now, anytime you file for benefits, the Social Security Administration deems you to have filed for all benefits that you're eligible for, which includes not only those spousal benefits, but also your own benefits as well. So again, that was the elimination of the restricted application. So as we talked about earlier, your spousal benefits are not tied to when your spouse begins collecting benefits. It's only tied to your spouse's primary insurance amount. However, you can collect your spousal benefits early. And again, that's going to be at a reduced amount, just like your regular benefits are. So if your full retirement age is 66 and you take those spousal benefits as early as you can at age 62, your spousal benefits are going to be reduced to about 35% of those total benefits. So remember, 50% is your maximum amount that you can get. So 35% would be the amount that would get reduced to. And if your full retirement age is 67, those spousal benefits will be reduced from 50% down to 32.5%. So again, that's going to be tied to when your spouse collects, not when the higher wage earner collects their benefits. So when you decide to start collecting your Social Security benefits does impact your spouse's survivor benefit if something should happen to you. So if something happens to either you or to your spouse, what will happen is the survivor will actually get the higher of the two benefits. So let's take a quick example here. Let's say that your benefit is $2,000 a month and your spouse's benefit is $1,000 a month. If something happens to either one of you, the surviving spouse would get that higher $2,000 amount, but the lower amount, the $1,000 benefit, would disappear and you would not get that anymore. So on this case, what's very important to know is it's not tied necessarily to your primary insurance amount. It's tied to the amount that that spouse was collecting at the time of their death. So if you collected early, so in that example we looked at earlier, where collecting early brought that benefit all the way down to $2,002 a month, that benefit is then going to be the surviving benefit. It doesn't matter what that benefit could have been had you waited till your full retirement age or had you delayed that to age 70 and got those delayed retirement credits. So when you collect is going to have a huge impact on the survivor benefit of that. And it's something definitely to think about there because, how is that surviving spouse going to get by? Are there other resources, other assets that you could tap into to meet those lifestyle demands of that survivor? So anyway, that's how your benefit is going to be impacted for your spouse by collecting early versus waiting and taking it later. And one of the things that we usually like to recommend is having at least one spouse, usually the higher wage earner, try to delay some of those retirement credits as long as possible to build up that survivor benefit for the survivor there. The number 3 factor is, will you be working? So if you're working, hopefully you have enough cash flow coming in where you can continue to delay those Social Security benefits, either until your full retirement age or maybe beyond your full retirement age too, as late as age 70, and earn some of those delayed retirement credits. But if you are planning on working and collecting your Social Security benefits, and you're going to do that before your full retirement age, there's actually some very strict restrictions on this. We've had some other videos that I've done where I've talked about this, and it gets really, really messy here. But before your full retirement age for 2019, the Social Security Administration allows you to earn up to $17,640. Beyond that, they're going to start to take away some of your benefits. So what they're going to do is they're going to reduce your benefits by $1 for every $2 that you're over that limit. So again, it gets very, very messy. And the reason why it gets messy is because the Social Security Administration doesn't necessarily know that you're working or know that you are going to be over that limit, usually until you file your income taxes. So usually they're about a year and a half to 2 years behind, and you'll get these letters in the mail saying that they overpaid you by X number of dollars, and therefore they're going to readjust your Social Security benefit going forward. And it just gets really, really messy there. So if you're planning on working and you're going to do that before your full retirement age, be sure to try to not go over that earnings limit. And ideally, it'd be nice to grow those benefits either for yourself to get those higher amounts over your lifetime, or for your survivor benefit down the road. And then one thing to note there is they do offer a little bit more generosity. It gets a little bit more confusing as well. But in the year that you reach your full retirement age, you can actually earn up to $46,920 before they'll start to take away any benefits. And those are in the months leading up to your full retirement age. So if your full retirement age is in June, they will give you that $46,920 that you can earn in those first 6 months of the year. And then after that, you can earn as much as you want once you reach your full retirement age month there. So keep that in mind. Working while collecting Social Security gets really, really messy, and it's a good reason to try to delay those Social Security benefits and grow them, earn those delayed retirement credits, and so forth. So the 4th factor to consider when deciding when to start collecting your Social Security benefits has to do with cash flow. Unfortunately, a lot of the planning that's out there, a lot of the tools that you might find online when it comes to helping you try to maximize those Social Security benefits are only focusing on the Social Security benefit and how to maximize that. In fact, actually earlier in the video, I had the table up on the screen where we talked about your decision to collect early, let's say at age 62, and what those total lifetime benefits were versus waiting until your full retirement age, in that example, age 67, or waiting until age 70. And obviously, waiting till age 70, if you have the longevity, definitely makes the most sense from just getting the most amount of money out of your Social Security benefit. But what it's not necessarily taking into account are all the other moving parts within your financial situation. So if you delay taking Social Security, it might mean that you have a bigger cash flow gap. And that bigger cash flow gap means that you have to start spending down some of your retirement resources. You have to start maybe selling off some of those investments that you have. Or maybe it means you have to take money from an IRA account. And that could mean that you have to pay taxes on the money coming out of the IRA. And it could push you up into a higher tax bracket. So there's this compounding effect that could happen within your decision to collect Social Security that might adversely affect some of these other things. So that's one of the things that we do with our comprehensive financial plan. I'll put a little plug in here for it. It's called Wealth Vision. I'll put a link below the video if you want to learn a little bit more about that. But it's a complete cash flow analysis that looks at what those gaps are, helps us make decisions, or help people make decisions about when to start collecting Social Security, and looking at what the impact of collecting earlier versus delaying has on the long-term situation. What's that doing to your tax situation, both now and off into the future? And so having that tool really helps us make a little bit more informed decision. And what we sometimes find is that it might make sense for somebody to take Social Security benefits early because it puts less strain on the overall portfolio and lets that those benefits grow a little bit more. We don't have to take as much out of a withdrawal IRA in that example. So the last factor that I want to talk about here has to do with taxes, and it has to do with your required minimum distributions from your retirement accounts. So as I'm sure probably most of you watching the video here are aware, is that after you turn 70 and a half, the IRS starts forcing you to start taking distributions from any of your traditional retirement accounts, IRAs or 401k plans. And basically it's the IRS's way of saying, hey, you've gone long enough without paying any money or any taxes on that money. You need to start taking some withdrawals and start paying your fair share of taxes. And so the reason why I bring this up in a discussion about Social Security is that a lot of people don't, again, realize what the impact is of all of the moving parts within their financial plan. So what's common for a lot of people is they might say, hey, I want to take Social Security early. Maybe it's even because you think there's some longevity issues, or you just say, hey, I don't think Social Security is going to have any money, so I might as well get my fair share while I can. And so what oftentimes happens is taking those Social Security benefits early ends up meaning that you don't need as much money from other sources. And what oftentimes people have is they have money that's in an IRA or a 401k plan, and they delay taking any withdrawals from those accounts until they absolutely are forced to do that after reaching age 70 and a half. And by that time, sometimes it's too late. Sometimes those required minimum distributions, and this is something that we're seeing quite often right now, those RMDs are actually forcing people up into much, much higher tax brackets, and that could be a very bad thing. So what we want to do is we want to include, again, we talked about this in number 4, was looking at what the impact was on the cash flow situation, but also we want to pay more attention to what is the impact on those taxes. So for example, again, we're filming this video in 2019. We kind of have a little bit of a gift going on right now, and I've actually made several videos about this where we're talking about the 2018 tax cuts that are going to be in effect from now until the end of 2025. Well, pretty much across the board for most of the people probably watching this video, our tax rates are going to be lower. And because of that, it might make more sense to accelerate some of the distributions from our retirement accounts. And if we add in a distribution or a taxable, let's say, Social Security benefit, that might mean that we don't have as much or as favorable of a tax situation as we would have if we delayed taking those Social Security benefits. So the last one, again, kind of wrapping up, and what we're talking about here is, again, paying attention to what those future withdrawals from IRA accounts are going to be, but also, too, is there a way that you could do two things? Not only maximize your Social Security benefit by delaying it and growing it to a larger amount all the way to age 70 if you want, but also giving you a lower tax bracket situation where you can take some distributions from retirement accounts, pay that tax now at these lower tax rates. So that's something we do, again, within our financial plan. We can run those analysis and see what some of those tax benefits may be. So there you have it. I know this was a little bit longer video, but it's actually one of the most important decisions that you're probably going to make as it pertains to your retirement. That's, when are you going to collect your Social Security benefits, and how does that Social Security piece fit into your overall retirement plan? So again, if you like what we're doing here, make sure you hit that like button, subscribe to the channel. So we're getting a lot more active with filming these videos, trying to get videos up at least 3 days a week. Usually that's going to be on Tuesdays, Thursdays, and Saturdays. So again, if you're subscribed to that, and then hit the bell too, because the bell notifies you when we're coming out with new videos so you don't miss any of them. And again, check the description below. You'll find all of our other resources and the links to the other videos in the series. So with that, have a great day, and I'll see you back in my next video. Bye.